Well, I don't think it's any one event that causes this market to do what it's going to do. The market had already started to self-correct in the technology sector way before the Fed made its statements. And basically, the Fed is making the statement that we are going to keep interest rates low because they're not fighting, but they are combating monetary. They're making sure that monetary policy, they are combating inflation and making sure that the unemployment numbers that come in at various times are in line with everything that they're doing. They are also backstopping loans right now, so they're doing a ton of stuff that isn't in their mandate per se. The market already knows this, and it is really kind of priced in at this point. So we can just see that continuation of the sell-off in the tech sector. We're going to have a few days where it's bouncing up and down, but at this point we're going to see that retraction, and I wouldn't be surprised if it's a little bit more dramatic at this time of year because people are taking profits and there are traders who are renewing their positions. So they're going to start selling off and buying in other areas, or buying in the same areas and waiting 30 days to do so if it's for private clients for tax loss purposes. But if you see what's happening currently, it's not really any one big event. So at this point, we can just say that the pullback's healthy and it's stable, and it's allowing for 485 other stocks in the S&P to participate in this rally that they've missed out on. I mean, not that they've missed out entirely, but just not as much as the top 15 stocks in the S&P that we've seen go up a phenomenal amount. So this might be the catalyst for these particular, the 480 other S&P 500 stocks to start moving on the upside, other sectors to start moving on the upside and start making money if they are part of the quote-unquote new economy. So that's going to be something we're going to be watching and placing bets on. The thing is to remember, the market loves certainty. And with that certainty, whether it be a vaccine, whether now or at the end of the year or 2021, I see that as the bigger catalyst of making the market move on the upside. But the thing to remember is that that's just one of many factors coming along. If the reopening continues and the economy starts building up, unemployment numbers could go lower. We could also see growth in the economy because more people are spending money, and consumers overall feel more confident in the expenditures that they're making. And then corporations, which have been recording challenging revenues at this point, we could see the final quarter of this year start to be a little bit more optimistic and better revenues than we had seen previous quarters or a year ago revenues, where they're not dropping so much. But that certainty overall makes for better markets and for better investments. The word with IPO, and I did a ton of initial public offerings when I was with the wirehouses, and the one thing that I would tell clients over and over is that this is a gamble, and you have to be ready to get out in a moment and have a price target. If that's your price target, stick to it. Don't get caught in the long game if that's not what your original intention was for. So I think that the IPO markets being strong are another strong indicator that the economy as a whole is holding up right now. That, it's kind of like when you're in trading and there's a certain amount of buy and it won't go past a certain level. It's what we call a resistance level. IPOs right now are past that resistance level, of sorts in their markets, and they're going and deals are being done because a lot of deals had been held up since March because of the COVID, and now we're going to see a lot more deal flow start to happen. And I would venture to say that there's going to be a lot more positive news on this front. There's money to be made if you're smart and strategic about it, and IPOs are just another way to make money in this market.